Jeff Bezos and Bill Gates are investing heavily in farmland. Here's how you can too. People would have laughed at you if you had told them a decade ago that they could invest in farmland without ever setting foot on the property. The internet has made it easier than ever to earn just about anything you want. So, with all this content and information available, how did you know which ones to earn from and which ones actually work? Luckily for you, Real Talker, for today's video, we'll be talking about farmland. Did you know that Jeff Bezos and Bill Gates are now investing heavily in farmland? We've produced a video of how you can do that too. Remember that while the first step is completing any of this information, the second and possibly more important step is taking action, even if it's imperfect action. Did you know that you can buy farmland without ever having to set foot on it? Farmland and agriculture can help diversify any investment portfolio and smooth out risk by generating returns that aren't always correlated with other markets. Fear is gaining control. In 2022, the S&P 500 lost about 16% of its value, while the tech-heavy Nasdaq has lost 26%. Rising interest rates, supply chain issues, and an economic slowdown are all causing concern among investors. Billionaires, too, are jittery. They do, however, have access to an asset class that has a track record of protecting wealth: agricultural land. Here's why the world's richest people are buying farmland and how you can get in on the action. The benefits of farmland. Farmland is a particularly stable asset class due to a number of factors. For one thing, the underlying commodity is critical. Wheat, soybeans, canola seeds, and corn will always be in demand. The ongoing conflict in Eastern Europe, combined with India's protectionist policies, has created a global supply shock this year. The cost of food has risen dramatically. This upswing benefits farmland owners. As a result, it's a far more effective inflation hedge than most stocks and bonds. It's no surprise then that billionaires have been investing heavily in space in recent years. Prior to their divorce, Bill and Melinda Gates amassed roughly 270,000 acres of farmland in less than a decade. In recent years, Amazon founder and chairman Jeff Bezos has amassed 420,000 acres. Ted Turner and Thomas Petterfee are two other notable farmland investors. According to data from the United States Department of Agriculture, about 80% of rented farmland is owned by investors who don't farm themselves. As more investors become involved and the barriers to entry become lower, this ratio may rise. Here's how to purchase farmland with them. Individual investors can't even imagine the kinds of investment options available to billionaires. Custom derivatives, private placements, and even entire social media networks. So, as inflation rises, where are they flocking to buy real estate? Farmland. Farmland may appear uninteresting, but it has historically been one of the best investments for inflation protection. Let's look at which billionaires are investing in farmland, the case for it as an investment, and how you can get in on the action with Gladstone Land, Land 2.33%, and Farmland Partners, two real estate investment trust, REITs, FPI, 1.05%. The billionaires are the richest people on the planet. Shahid Kahn founded the automotive parts company Flex & Gate in Urbana, Illinois, but is best known as the owner of the Jacksonville Jaguars of the National Football League. A spokesperson for one of his companies recently confirmed that it had purchased 24,000 acres of farmland. Because Urbana is located in the heart of central Illinois farm country, Kahn should be well versed in the investment. Kahn had spent $84 million on farmland in 10 central Illinois counties as of April 2021. He started buying in 2015, and he's most likely bought more since April 2021. Bill Gates, who was the country's largest farmland owner before his divorce from Melinda Gates, is our next billionaire. Over the last 10 years, Gates' investment management company is said to have purchased over 269,000 acres of farmland. Finally, Amazon's Jeff Bezos has recently joined the farmland buying frenzy. Bezos surpassed Gates in terms of farmland ownership earlier this year and now owns 420,000 acres. The case for farmland investment. Right now, the best case is that farmland protects against inflation. Farmland is leased to a farmer with price increasing contingencies. The lessor gets a share of the windfall profits if food prices skyrocket, as they are right now. Of course, as prices rise, all businesses with primarily fixed costs hope to see a windfall profit. The elasticity of the demand curve distinguishes farmland. People can't stop eating when food prices rise. When prices rise, demand falls in many industries with elastic demand. People will begin to save more as food prices rise, but demand should not drop nearly as much. Investing in farmland isn't just for inflation protection. Investors can also diversify their portfolios with this asset. Your returns will be more consistent over time if your various investments are less correlated. Farmland has consistently had positive returns and higher yields than the most popular government bonds during the past 4 US recessions. According to a white paper by fund manager Nuveen, since 2007, it has also had lower average volatility than US stocks and 10-year treasury bonds. Farmland may take a temporary hit if the stock market crashes, but it's unlikely to enter the same bear market. How do you get a piece of farmland? Individuals can invest in farmland in ways that custom derivatives and entire social media networks can't. Gladstone Land is the most popular. Gladstone owns 164 farms, totaling over 110 acres of farmland. Investors have piled into the stock for inflation protection, and it has risen nearly 70% in the last 6 months. That isn't to say it isn't a good deal today. The dividend yield remains at 1.4%, and the stock is currently trading at just over 2 times book value. It's important to remember that the book value of the company is based on the price it paid for farmland. According to a recent presentation by management, the value of some of that land has increased by 162% since 2000. Gladstone's profits will rise as food prices rise, and more investors will likely buy farmland, driving up the value of the company's assets. Profit and assets both increase the company's ability to expand its portfolio and grow. Another way to learn about farmland is to join Farmland Partners. It's a better option for vertical integration. It owns 160,000 acres of farmland and has recently entered the farmland management business. It currently manages another 26,000 acres, as well as farmland auctions and brokerage. Farmland Partners has the same exposure to rising food prices in its leases as Gladstone, but it also has a greater direct exposure to both rising food and farmland prices with the land it manages with its auction and brokerage businesses. It's worth noting that neither of these REITs has proven to be an ideal vehicle for investing in farmland thus far. Farmland Partners was embroiled in a legal battle with a short seller who published false information for years. Gladstone Land has outperformed the market in the last year or so, since inflation fears began to rise, but it trailed the market for the previous 7 years. It's possible that the two REITs will fail to attract investors unless there are significant macroeconomic headwinds, such as rising food prices. It's also possible that recent events have provided the companies with the impetus that they needed to enter a new phase of growth. Purchasing farmland. Directly investing in farmland is both costly and complicated. Retail investors, on the other hand, can gain exposure to farmland by purchasing publicly traded real estate investment trust. Gladstone Land is one of the few farmland REITs on the market that is pure play. The company owns 112.5 million acres of farmland, which it leases to farmers with good credit and experience on a triple net basis. The company's occupancy rate is 100%, according to its most recent quarterly report. Gladstone currently has a dividend yield of 2.2%. Farmland Partners is another REIT that invests in agricultural land throughout the United States. The company manages over 100 tenants who grow 26 major commercial crops across 185,700 acres in 19 states. While farmland makes up the majority of the portfolio, it also includes groundwater assets and grain facilities. The stock yields 1.7% in dividends. Investing in farmland through these two REITs may not provide much in the way of passive income. However, they have the potential to provide both capital growth and inflation protection. Number 1. AcreTrader. AcreTrader makes it simple to invest directly in farmland. You can invest in fields that grow a variety of crops all over the United States. Individuals choose a plot of farmland and buy stock in the company that owns it. A share is roughly equal to a tenth of an acre. The tenant farmer who uses the field pays the investors a rental fee. You can sell your shares at the end of the investment period and profit from rising property values. AcreTrader claims that lower-risk properties can yield a 3 to 5% annual yield, making it a great opportunity for passive income. AcreTrader also assigns a risk rating to all properties for informational purposes. Photos, location details, and crop information for the property are all available. AcreTrader has a high minimum investment requirement starting at $10,000. The minimum investment, however, is determined by the price per acre. The average investment period per offering is between 5 and 10 years. A 20-year holding period is required for some projects. One disadvantage is that AcreTrader requires you to be a high net worth accredited investor. You must earn more than $200,000 per year or have a liquid net worth of $1 million. AcreTrade is a good option if you're looking for a long-term investment strategy. You'll also gain experience with farmland investment. Pros: farms are owned directly. Historical yields that are appealing. Several farm investment options are available. Source of passive income. Cons: only accredited investors are eligible to participate. Minimum investment is very high. Number 2. Farm Together. Farm Together is similar to AcreTrader in terms of functionality. You own fractional shares of single farms through Farm Together. You can also buy entire farms, but this is more expensive. Farm Together promotes purchasing shares in farms that are leased to and managed by experienced farmers. The farms are bought at a discount and then improved. Shareholders profit in two ways: consistent income from the land lease. With the sale of the farm, there will be a one-time payment. Farm Together's investments are typically long-term, with a 5 to 10-year holding period. Returns of 7 to 13% per year, on the other hand, can be quite appealing. Farm Together does not offer agricultural REITs. Instead, you're investing in LLC shares. Farm Together's offerings are only open to accredited investors. Non-accredited investors, on the other hand, are being considered by the company. Pros: historical returns that are appealing. There are two ways to earn money. There are no REITs. Cons: only accredited investors are eligible to participate. Only make long-term investments. Number 3. Stocks and bonds. Corporations own many farms, especially the largest ones, and some of them are publicly traded. Stocks in a variety of agricultural companies are available for purchase. The majority of free investing apps allow you to purchase these stocks. The following companies have publicly traded stocks: producers of crops, producers of seeds, fertilizer manufacturers, companies that deal with transportation, distributors of food. Here's a look at some of the different types of agricultural publicly traded companies. The stock symbols listed below are suggestions, not official recommendations. To find farming stocks that fit your investment strategy, do your homework and use a stock screener. Companies that own or lease farms and produce the crops and livestock that feed the world are known as crop producers. The following are some of the most well-known publicly traded companies in this field: NYSE Agro, Adecoagro SA, Del Monte Fresh Produce, NYSE FDP. Manufacturers of seeds. Companies developing seeds designed to withstand drought and other harsh conditions while producing high crop yields are responsible for some of the most significant advances in farming. These businesses include OTCMKTS, BASFY, BASF, OTCMKTS, BASFY, BASF, OTCMKTS, BA. Dow, DOW, NYSE DOW is a stock on the New York Stock Exchange. DuPont, NYSE DD is a chemical company based in the United States. Many of these businesses are large conglomerates with divisions that have nothing to do with agriculture. Non-farming activities can have a negative impact on stock performance. You also don't have a farmland investing pure play when you invest in a conglomerate. Fertilizer manufacturers. Fertilizer companies account for billions of dollars in revenue for some of the largest agricultural companies. Stocks of fertilizer include Altius Minerals Corporation, is a mineral exploration and production company based in the United States. Nutrien, NYSE NTR, is a company based in the United States. The Scott's Miracle Grow Company, NYSE SMG, is a leading manufacturer of lawn and garden products. Manufacturers of equipment. The work of managing a farm necessitates the use of tractors and other equipment. As a result, it's worthwhile to look into the heavy equipment manufacturers. Over the years, there has been a significant amount of consolidation in this industry. The majority of farm equipment is currently produced by 3 companies. Deere & Company is a company founded by John Deere, DENYSE. CNH Industrial, CNHI, is a publicly traded company in the United States. AGCO, NYSE, AGCO, is a publicly traded company in the United States. Processors and distributors. Between the time a farmer plants a crop and the time it reaches your table, a lot happens. Many businesses process farm produce before distributing it in consumer goods in the United States. These businesses include Archer Daniels Midland, NYSE ADM, is a company based in the United States. Tyson Foods, NYSE TSN, is a food company based in the United States. Pros, several investment options are available. Non-accredited investors are welcome to participate, investing for the long or short term. Cons, individual company investing carries a higher risk. Make sure you're not putting all your eggs in one basket. Number 4. Goods and services. Did you know that you can make money by investing in farm commodities? Soybeans, corn, wheat, coffee, live cattle, and lean hogs. You can buy these items as commodities and make bets on how much they will cost in the market. Commodities are heavily traded on CME Group's mercantile exchanges in New York and Chicago. If commodities trading intimidates or perplexes you, consider investing in commodity funds. These are exchange-traded funds that reduce risk while providing exposure to the broad commodities market. You can, for example, invest in soybean prices through the Teucrium Soybean Fund. You can profit if you sell your fund shares if soybean prices rise. The Invesco DB Agriculture Fund, which invests primarily in agriculture futures, is another example. With a single investment, you can invest in multiple crops. Most crop commodities have commodity ETFs that trade on investing apps like M1 Finance. Stocks and ETFs can be purchased for as little as $1. The fact that your investment income is reported on a Schedule K1 tax form is one disadvantage of commodity ETFs. This is a more complicated form than a standard 1099 tax form. You could limit your investments to farming-related stocks that don't require a K1 form. Pros, potential for high-yield returns. Minimum investment amount can be low. Cons, risk with commodities investing can be high. Complex type of investing. Number 5. Mutual funds and exchange-traded funds or ETFs. Are you unsure how to choose individual agricultural stocks? Consider investing in a mutual fund or an exchange-traded fund that focuses on the agricultural sector. This can give you access to a wide range of farming companies without requiring you to research each one individually. It's simple to look at a fund's or ETF's individual holdings to see what it invests in. For example, the Vanek Vectors Agribusiness ETF invests in the following farming companies: Archer Daniels Midland, Tyson Foods Nutrient Company, Deere & Company, as mentioned in the previous suggestion. There are also dedicated commodities, ETFs, and funds. Pros, investing in mutual funds is considered tried and true. Investing in a variety of ways is a great way to diversify your portfolio. Minimum investment is low. Non-accredited investors are welcome to participate. Cons, not every mutual fund performs well. Before selecting funds, it's recommended that you gain some knowledge and conduct some research. Number 6. REITs, Real Estate Investment Trust, are real estate investment trusts that collect money from real estate portfolios. You can also invest in REITs that are related to agriculture because they are required by law to return profits to shareholders in exchange for avoiding corporate taxation. These securities frequently pay out high dividends. Gladstone Land Corporation was the first agricultural REIT, specializing in land acquisition and leasing to farmers. It owned 90 farms and 75,000 acres as of 2019. Farmland Partners is the largest farm REIT in the United States, with approximately 162,000 acres and 125 tenants. These REITs can be a good alternative to holding income-producing assets for non-accredited investors who don't qualify for AcreTrader. Pros, process of selling quickly. There are no shipping costs. Cons, there are no stores in a number of cities. Purchase prices that could be low. Number 7. Farm debt investing. You can be a lender to farms in addition to purchasing equity in them. In 2018, farm debt totaled $409.5 billion. Individuals owe 10% of farm debt according to the USDA's Farm Sector Income Forecast. Farmers frequently borrow money because they operate in a capital-intensive industry. They may require short-term loans to help them plant. They may also be able to obtain long-term loans to help finance the purchase of equipment. They will almost certainly have mortgages on their land. You'll receive consistent payments as the borrower repays the loans if you buy farm debt directly or through bonds. You won't have to be concerned about the inconsistency of farm revenue cash flow. Of course, there's always the possibility that the borrower will default when you buy debt. However, if you can find a farm that can pay its bills, you may have a good investment. Pros: process of selling quickly. There are no shipping costs. Cons: there are no stores in a number of cities. Purchase prices that could be low. Investing in farmland has potential. According to recent reports, the United States has more than 2 million active farms. According to the United States Department of Agriculture, this equates to nearly 900 million acres of farmland. This farmland is used for a variety of agricultural purposes, and it all generates income. To be considered a farm, you must sell at least $1,000 worth of agricultural products in a given year. It has also been reported that approximately 150,000 farms have earned more than $500,000 in recent years. Farming is, without a doubt, a large business with a large investment potential. You can buy shares in a farm or place bets on the prices of livestock and crops in addition to owning and operating a farm. Advantages and disadvantages. There are numerous reasons to believe that farming and agriculture-related businesses can be profitable investments. However, as with any investment sector, there are risks as well as rewards. Before farming up your investment portfolio, consider the following points. Advantages. Before farming up your investment portfolio, consider the following points. People must eat. The agricultural sector is not going away anytime soon. Farms will exist as long as there are people on the planet. Given the fact that our global population is only increasing, one could argue that it's a long-term investment. Farms are becoming more productive. On average, an acre of farmland produces significantly more crops today than it did 20 years ago. This means you may not need to purchase as much property as you previously did. Farms can now produce higher yields with less land and other resources thanks to scientific and technological advancements. According to the USDA, farm output doubled between 1970 and 2015, despite a decrease in total farmland and labor. Disadvantages. The results have been unsatisfactory. Despite the fact that the farming and agriculture industry is vast and diverse, it's difficult to argue that it has been a significant driver of investor returns in recent years. In 2019, net farm income in the United States increased to $88 billion. However, this is down 28% from its peak of $123 billion in 2013. According to the average cash net income per farm in 2021, net farm income will fall by 8.1% in 2021 compared to farm income in 2020. Farmers' median household income in 2019 was $83,111, roughly the same as it was 4 years ago. Farmers earn the majority of their income from off-farm activities, according to the USDA. Consider that the S&P GSCI Agriculture Index has lost 3% per year on average over the last 10 years, but has gained nearly 7% in the previous 5. As a result, farm investments have not outperformed the S&P 500 index funds over the last decade. You are completely dependent on the weather and climate. Many factors in farming are beyond your control, such as whether or not the conditions are favorable for crop growth. Plants require an adequate amount of rain and sunlight. Crop yields can be affected by too much or too little of each. Farmers in the United States have dealt with the following adverse weather conditions over the years. California is experiencing drought, flooding in the Midwest, hurricanes in the Southeast, and heat waves across the country. Furthermore, climate change has the potential to have a global impact on agriculture. Overall, climate change may make it more difficult to grow crops, raise animals, and catch fish in the same ways and places as we have in the past, the EPA warns. Uncertainty is a result of trade wars. It's bad enough that the weather is out of your control. You also have no control over government decisions that affect your earning potential. The trade war between the United States and China, which has resulted in fewer imports of American crops, is one of the most pressing issues currently confronting farmers. The Chinese announced that they would no longer import agricultural products from the United States in apparent retaliation for tariffs imposed by the United States on Chinese goods. Imports were already down 50% between 2017 and 2018. According to this announcement, China's decision to stop buying agricultural products from the United States is a death blow to thousands of farmers and ranchers who are already struggling to make ends meet, said American Farm Bureau President Zippy Duval. According to Bloomberg, China increased record amounts of U.S. corn in 2020 due to local crop shortages. Geopolitical risks come and go, but they always have an impact on crop prices. Farming has become more important than ever as the world's population has exploded. As a result, investors looking to diversify their portfolios have an opportunity. Investing in farmland isn't a risk-free proposition. However, picking the right companies and fields can result in a steady stream of passive income. Investors who want to get into farming can do so in a variety of ways, including buying a farm. A farmland REIT can be purchased by investors who want to closely replicate the returns of owning farmland. Making equity investments in crop producers, supporting firms, or ETFs could be the best option for those looking for broader exposure to the agricultural sector. Those looking to profit from changes in agricultural commodity prices can use a variety of future contracts, ETFs, and ETNs. Investors should be able to find an investment vehicle and strategy that meets their needs among all of these options. That's it for this video, Real Talker. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!